Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, May 23rd, 2025. Kicking things off, I'm Max Profit. Key indexes were all down this week. The S&P 500 index closed at 5,802.82, dropping 155.56 points. The Dow 30 index fell 1,051.68 to 41,603.7. Despite showing strong positive trends, the Nasdaq Composite declined 473.89 to 18,737.21. Market breadth showed weekly advances outpacing declines across all major indexes. The S&P 500 saw 345 advances versus 151 declines, while the Nasdaq Composite recorded 1,901 advances against 1,157 declines. Monthly figures, however, revealed a broader market weakness. Weekly returns were negative across all indexes. The S&P 400 Midcap Index and the Russell 2000 experienced the largest declines at -3.5% and -3.4% respectively. Month to date, however, the Nasdaq Composite leads with a 7.4% gain. Looking at 10-year performance, the Nasdaq Composite shows the strongest annual rate of return at 13.9%, followed by the S&P 500 at 10.6%. The Russell 2000 has lagged with a 5% annual return over the same period.
Checking out best and worst performing equities, I'm Penny Stock. DigiAsia surged 239.1% to 0.66. Vigil Neuroscience jumped 216.8% to 7.89, hitting a new one-year high. Imunon rocketed 141.6% to 1.16, with strong upward volatility. Weekly returns were exceptional, with DigiAsia leading at 239.1% and a daily average return of 30.3%. Vigil Neuroscience followed with 216.8% and Imunon at 141.6%. Both showing remarkable daily momentum. Looking at annual performance, Vigil Neuroscience stands out with a 119.8% one-year return and 195.5% over 3 years. Other stocks in this group showed negative long-term returns despite their recent weekly gains. Among large caps, GE Vernova led with an 8.4% gain to 464.39, marking its 7th consecutive weekly rise. Dollar General and Intuit followed with gains of 8.3% and 7.4% respectively. Weekly returns show GE Vernova leading with 8.5% and impressive month-to-date gains of 25.2%. Intuit shows strong momentum with a 14.8% month-to-date return. Long-term performance reveals GE Vernova, up 187% over 1 year. Intuit shows consistent growth with 574% over 10 years, while Dollar General maintains modest gains of 37.8% for the decade. In declining stocks, Golden Heaven Group plunged 67% to 1.87. Wolfspeed dropped 62.8% to 1.45, both hitting new all-time lows. Unifuels fell 62.2% to 1.96. Weekly losses were severe, with Golden Heaven Group down 67.1% and a concerning minus 15.8% average daily return. Wolfspeed and Unifuels both showed similar dramatic declines, around 62%. Leading this week's worst performers, Golden Heaven Group plunged 67%, setting a new all-time low at 1.87. Wolfspeed fell 62.8% to 1.45, while Unifuels dropped 62.2%. AutoZai Internet Technology and Polarizune both declined around 48%. Among large caps, Fair Isaac led the declines, dropping 23% to 1,694.36. Enphase Energy fell 21.3% to a new yearly low, while Deckers Outdoor declined 20.9%. AES and Copart rounded out the top decliners, falling 18.1% and 15.9% respectively. Weekly returns show significant weakness, with Fair Isaac down 23% and Enphase Energy dropping 21.3%. Year-to-date, Deckers Outdoor has declined over 50%, while AES is down 22.4%. Copart shows the smallest year-to-date decline at 6.5%. Long-term performance varies widely. Despite recent drops, Fair Isaac maintains a 10-year return of 343%. Enphase Energy and Deckers Outdoor show positive 10-year returns, while AES has declined 27% over the decade.
And now on to U.S. sector performance, where sectors displayed mixed results. The utilities sector and the industrial sector both achieved new all-time highs despite closing lower. All sectors maintained very strong positive trends except basic materials, which showed a mixed negative trend. Market breadth data reveals industrials showed significant strength with 480 advancing stocks versus 134 declining. Communication services also demonstrated positive momentum with advances outpacing declines by more than 2 to -1. Utilities showed weakness with more decliners than advancers. In the shorter term, communication services leads month-to-date with a 7.3% gain, followed closely by industrials at 7.1%. Year-to-date, utilities and industrials are both up about 6.5%. Looking at longer-term performance, the industrial sector leads with a 10-year return of 143%, averaging 9.3% annually. Communication services follows with a 119% total return. Basic materials shows the weakest long-term performance.
Consumer defensive stocks showed strength this week. Dollar General led with an 8.3% gain to 101.39, showing 3 consecutive weekly gains. Philip Morris International hit a new all-time high of 178.19, while Dollar Tree extended its winning streak to 7 weeks straight. Looking at returns, Dollar General posted the strongest weekly gain at 8.4%, while year-to-date shows a 33.7% return. Philip Morris International leads the year-to-date performance with an impressive 48% return. Dollar Tree has maintained consistent growth with a 17.6% return this year. Long-term performance shows Philip Morris International leading with a 111.8% 10-year total return and a remarkable 78.8% one-year gain. Procter & Gamble follows with a 107.5% 10-year return, while Dollar General and Dollar Tree show more modest long-term growth.
The worst performing sectors this week were led by energy, dropping 4.4% with a very strong negative trend. Technology fell 3.4%, while real estate declined 3.3%. Consumer cyclicals and financial services both lost 3%. Looking at market breadth, technology showed strength with 514 advances versus 158 declines. Financial services also demonstrated positive breadth with 437 advances against 169 declines. Real estate remained evenly split with 114 advances to 115 declines. Weekly returns show energy leading losses at -4.4%, while month-to-date, technology has gained 8.2%. Year-to-date, consumer cyclicals shows the largest decline at -7.8%, while financial services remains positive at 3.3%. Looking at longer-term performance, Technology leads with impressive 10-year returns of 508%, averaging nearly 20% annually. Energy shows the weakest decade performance with just 6.6% total return, while real estate posted 37.8% over the same period.
Energy stocks experienced significant declines this week. Texas Pacific Land led the downturn, falling 11% to 1,272.41. Phillips 66 dropped 10% to 113.13. ConocoPhillips, Devon Energy, and Halliburton all showed very strong negative trends. Looking at weekly returns, Texas Pacific Land and Phillips 66 both saw declines exceeding 10%. Year-to-date, Texas Pacific Land stands out with a 15% gain, while Halliburton shows the largest decline at minus 26.7%. Long-term performance shows Texas Pacific Land leading with impressive returns, up 109% over 1 year and 2,411% over 10 years. In contrast, Halliburton and Devon Energy have declined more than 50% over the 10-year period.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.